What's going on, YouTube? I'm Zachary Kramer with Progressive Payment Solutions. Welcome to the PPS vlog. Today we're going to talk about pricing. There's three different pricing structures in our industry, and only two of them are relatively good. One of them you'd like to avoid. So I'm going to go over that today very quickly. And I'm also going to tell you exactly how the pricing structure works. So you have three actual structures. You have tiered pricing, interchange pricing, and flat rate pricing. The best one that you're going to want for your business is going to be interchange pricing. So let me explain how pricing works in the industry. Every credit card has a different rate associated to it. The example I like to use is the New York Jets and the New York Giants both have their own Visa Rewards card that you can apply for. Now, each one has a different rate associated to it, and as a business, you're not going to know the rate until that card is actually swiped. So, how are you going to be charged on that credit card transaction? In a tiered transaction, there's three buckets that it can fall into. There is going to be qualified, non-qualified, and mid-qualified. Now, those three buckets each have a rate associated to it. Whatever the rate is, it's going to be. So the card will fall into one of the three buckets. What your processor will typically do is advertise the check card or the qualified rate, which seems low. Now, here's the thing. A lot of credit cards typically get downgraded, so they don't even fall into the advertised rate. So that pricing structure, no good. We don't want that. The next pricing structure is flat rate pricing. That's kind of like, you have Chase, Payment Tech, or PayPal, and you pay a flat transaction fee of, if you swipe, the typical is 2.75% plus 10 cents a transaction, or 30 cents a transaction, whatever it may be. The reason this is bad is because, as I said before, every credit card has a different rate associated to it. In minor instances, you win because some of the rates are above and beyond 3% and you're only paying 2.75%. The majority of the time, however, especially with check cards and debit cards, it's actually lower, much, much lower. So you're actually overpaying on every single transaction, which you don't really want to do. So flat rate pricing is also a no-go. We don't want that. The best rate is interchange plus. So like I said before, you have the cost of the card, and then you have the plus, which is the margin on the account. We work on basis points. What is a basis point? It's 1/100th of a percent. So 100 basis points is 1%. The average pricing in our industry, you're looking at 20 to 50 basis points typically, so about 0.2% to 0.5% over the cost of money. Why is this more aggressive? Because every time a credit card is swiped, you're getting the actual value of the credit card plus whatever the processor is going to make on the charge, and it's going to be the same every time. It's going to be the 20 to 50 basis points every single time. Now, the basis points are typically charged based on the volume that your business is going to do. So this is where things get a little dicey. Some processors will charge a very high percentage on top. So, I've seen as high as 200 basis points, which is 2%. Really, you should be between 20 and 50. That's about the average. And again, it depends on the size of your business. So if you're only doing 5 to 10,000 a month, you're not going to get 10 to 20 basis points on your pricing. It's just not going to happen. It's still negotiable, but what I'm telling you is that if you negotiate, especially with the larger companies, to pay a very low percentage and you're only doing a small amount of volume, they will raise the pricing after a short period of time. They have to make money. Everybody's in business to make money, so it is what it is. But that is the most aggressive pricing structure. Now, there is one time flat rate pricing is actually good, and that is called cash discounting. That is when you're passing the credit card fee to your customer so that you as a business no longer have to pay those credit credit card fees. Yes, that is legal now if you're doing it in a federally compliant way. So let's talk about that for a second. If your customer walks in and you charge them $10, let's just say, for whatever service you provide, they're going to pay typically around 3.5 to 4% on top. And that's where the flat rate pricing comes in. Why does it have to be flat rate for that program? Very simple. It's because you as a business cannot charge a customer a different rate than another customer. That's being selective, and that is against federal law. So you can't selectively choose one price for one customer and one price for another customer. That's discrimination. We don't want to do that. So flat rate pricing, that's the only time it's good. So to sum it up, the best pricing is going to be interchange plus, and you should be paying between 20 to 50 basis points depending on your volume. Anyway, thanks for stopping by. Have a great rest of the week, and feel free to like, comment, and subscribe for more tips about our industry. Have a good one. Peace.